Hello and welcome to Trading Club Q7. I'm your lead educator today to walk you through another crucial concept in the world of trading: candlestick patterns, specifically hammer candles. Today we're going to dive into what hammer candles are, why they matter, and why context is crucial for making informed trading decisions. When you first start trading, it's easy to get overwhelmed with complex charts and patterns. You might have been told that candlestick charts are the most popular and efficient tool for traders, but struggle to understand what they actually mean. By the end of this lesson, you'll have a solid grasp of hammer candles and avoid making rookie errors. Let's start with the basics. A hammer candlestick pattern is formed by a small or non-existent body at the bottom of the pattern, which looks like an upside-down hammer. Imagine a hammer, like the one you used to pound nails, with only a tiny head. This is the opposite, where the body of the candlestick is tiny and sticks out of the lows, giving it that hammer-like appearance. Think of a hammer candlestick pattern as a momentary pause in selling pressure. Traders are still selling stocks, but the buyers are fighting back, preventing the price from falling lower. This pause often happens when the price hits a significant support area. You can relate this to a river. Imagine the water level receding, but instead of going all the way down, it levels out momentarily before continuing its journey. This makes sense, because when you see a hammer, you know that the bears or sellers aren't gaining control, and that's a signal worth noting. For a simple example, let's say you have a stock that's been falling for days straight. On the 100th day of consecutive falling price, a hammer forms after the price hits the 50 mark. In this instance, the hammer indicates that buyers stepped in, preventing further losses. However, if the same stock had previously been stable or had a recent upward trend, it might look like a different story altogether. One common mistake beginners make when it comes to hammer candles is misinterpreting the context. They see a hammer and immediately assume it's a buy signal without considering whether it fits the bigger picture. They might ignore the previous bearish candlesticks or recent downtrend. Another crucial consideration when interpreting hammer candles is the size of the body. A small body is more significant than a larger body, as it indicates a stronger buying pressure. This is where experience and knowledge of the specific stocks come in. You'll learn to spot a strong hammer and recognize it as an opportunity to buy. In addition to the body size, you should also consider the color of the candle and the trend direction. A hammer is more significant when it appears in a downtrend or when there's a recent downward movement in the stock. When you see a hammer at the bottom of a declining trend, it usually signifies a bottoming process. So, when interpreting hammer candles, always ask yourself, does this fit with the current trend? Are other indicators backing this up? And remember that context is key. Hammer candles don't guarantee an immediate turnaround or any specific outcome. It's just a signal worth monitoring. To practice and solidify your understanding of hammer candles, I want you to head to your demo chart and search for any stock that's been trending downwards. Look for hammers and consider their context. Do they appear near a significant support area? Have the previous 57 candlesticks been showing a sell-off? Write down the date, time, price level of the hammer candle, the previous 57 candlesticks, and the current trend. Then, write down 23 possible reasons why you think this hammer might signal a potential turnaround. Here's an example of what your notes might look like. Stock ABC Corporation support area, previous high of 25, previous candlesticks bearish candlesticks with a downtrend of 5 consecutive days, current trend downward trend with a significant sell-off, date 23 February 2023, time 1500 EST, price level 22 reasons for potential turnaround. Now it's your turn to analyze some stocks and write down your findings. Remember, practice is key, and identifying hammer candles in different contexts will help you become a more confident trader. That's it for today's lesson. We've covered the basics of what a hammer candlestick pattern looks like, why it matters, and the most common mistake beginners make when interpreting it. If you've found this helpful and want more, please hit that like and subscribe button below. In our next lesson,